Imagine a future where you no longer need to work actively to ensure your financial security. That's the power of passive income, a concept that, if applied correctly, can change your financial life. For those of you over 50, it can be a crucial path toward achieving the financial freedom you've always dreamed of. Passive income is when your investments start working for you, generating money consistently without you having to do much more than make smart decisions at the start. And this is exactly why it's so important to start building this foundation as soon as possible. Even if you're just starting now, with the right strategies, you can make your money work for you, offering not just stability, but a life free from the weight of depending solely on active work. Let's explore step by step how this is possible. I've spent my entire life studying the financial markets, and my investment philosophy has been shaped by one central belief. The markets are unpredictable, but understanding their nature allows you to develop strategies that maximize returns while minimizing risks. My approach has always been about more than just seeking profits. It's about adapting to changing circumstances and making decisions that align with long-term goals. For those over 50, this is especially important. Time is more precious, and your decisions need to be more calculated. I focus on a balance of risk and reward, not on quick wins. It's about setting yourself up for sustainable income and growth over time. The philosophy I've built has proven effective, and now it's time to share with you how you can use these principles to create a lasting and reliable passive income stream, regardless of where you are in life. Diversification is one of the cornerstones of a solid passive income strategy. I cannot stress this enough. If you put all your money in one basket, you're asking for trouble. Over my career, I've learned that the key to stability in investing is spreading your risk across different assets. This is especially true for those of you over 50, as you don't have the luxury of time to recover from a large loss. By diversifying, you ensure that no single failure can completely derail your progress. Think of it this way. Just like a well-balanced portfolio, life itself is made up of a variety of components. You need different sources of income to weather any storm. This includes stocks, bonds, real estate, and even alternative investments. The beauty of diversification is that it allows you to capture growth in various sectors and markets, reducing the impact of any single downturn. At your stage, the risk of being overexposed to one type of investment is high. A diversified portfolio creates the foundation for long-term growth and passive income that continues to flow in, even when you're not actively working. It gives you the flexibility and security needed to live life on your terms. When I look at the markets, I don't focus on short-term gains. My philosophy has always been centered around long-term investing. The real value in building a passive income stream comes when you think beyond the next quarter or even the next year. It's about making decisions that will pay off years down the road. And for those of you over 50, it's even more crucial. You have a limited window to let your investments grow, but that's no reason to rush. In fact, rushing could cost you in the long run. The key to successful long-term investing is patience. Building a passive income stream takes time, and the best returns don't happen overnight. But when you're patient, your investments compound, and you start to see the true benefits. I've experienced this myself. There's no shortcut to success in investing. The more time you give your investments to grow, the more they will reward you. So, resist the urge to look for quick profits and focus on steady, sustainable growth. To build a reliable passive income, it's critical to focus on assets that have long-term growth potential. For me, investing in companies or industries with consistent growth is the key. Whether it's stocks in innovative companies, real estate in prime locations, or funds that prioritize sustainable growth, These assets provide the foundation for a passive income that won't dry up after a few years. One of the greatest benefits of focusing on growth-oriented assets is their ability to compound over time. Stocks of companies that are continually evolving and expanding can offer you not only dividends, but also capital appreciation. In the case of real estate, investing in properties in high-demand areas can provide steady rental income and value appreciation. It's essential to think beyond immediate returns and focus on the long-term trajectory of the asset. As you age, you'll want investments that continue to generate income without needing constant attention. This approach gives you peace of mind, knowing your wealth is working for you. So, rather than chasing quick profits, shift your focus to assets that offer long-term growth. The beauty of this strategy is that it aligns perfectly with building a passive income stream that can support you for years to come. One of the most powerful tools in investing is compound interest. If you're not familiar with it, think of compound interest as earning interest on your interest. It's what allows your investments to grow exponentially over time. For those of you over 50, the earlier you harness the power of compound interest, the better. Even though you may not have decades ahead, you still have enough time to benefit from this remarkable force. Let's break it down. When you invest and reinvest the returns you earn, those returns themselves start to generate income. Over time, this compounding effect can make a significant difference. It's not just about earning returns on your initial investment. It's about letting your money grow faster by reinvesting. This is why it's important to start building your passive income as soon as possible, because the more time you give it, the more powerful the effect of compound interest will be. And this is how wealth is truly created. When building a passive income stream, one of the most important factors to consider is how to minimize taxes. Taxes can eat into your returns, especially when your income starts to grow. The key to protecting your wealth is understanding how tax laws work and utilizing strategies that can reduce your taxable income. This is an area where many investors overlook, but it's crucial if you want to maximize your returns. For individuals over 50, this becomes even more important. As you approach retirement, every dollar counts. You want to keep as much of your income as possible. One strategy I often use is investing in tax-advantaged accounts like IRAs or 401ks, which allow you to defer taxes until you withdraw the funds. Another way is to invest in municipal bonds, which can offer tax-free income in some cases. Additionally, focusing on long-term investments allows you to take advantage of capital gains tax rates, which are often lower than ordinary income tax rates. Minimizing taxes isn't about evading them. It's about being smart with your investments. By using tax-efficient strategies, you can ensure that more of your passive income stays in your pocket where it belongs. Managing risk is critical when you're building a passive income stream. The truth is, no investment is completely risk-free, but there are strategies to protect your capital and minimize losses. For me, risk management has always been about balancing high-reward investments with safer, more stable ones. You don't want to put all your wealth in high-risk assets and hope for the best. Instead, you need to create a well-diversified portfolio that includes a mix of aggressive and conservative investments. For those of you over 50, risk management becomes even more important. At this stage, you can't afford to lose large portions of your wealth. This is why I recommend having a portion of your portfolio in low-risk, income-generating assets like bonds or dividend-paying stocks. The idea is to create a safety net while still allowing for growth in higher-risk investments. Remember, your goal isn't to take unnecessary risks. It's to preserve your capital while allowing it to grow steadily. A balanced portfolio, along with smart risk management, ensures that your passive income strategy can weather any storm, giving you peace of mind as you move forward. One of the simplest and most effective ways to build a passive income is by investing in mutual funds and exchange-traded funds, ETFs. These vehicles allow you to diversify your investments with minimal effort. Instead of picking individual stocks or bonds, you can invest in a fund that holds a variety of assets, which automatically spreads your risk. For someone over 50, this is an excellent option because it provides exposure to different markets without the need for constant monitoring. Mutual funds and ETFs are ideal for those who want to build wealth passively while still benefiting from the growth of the market. ETFs in particular have low fees and provide instant diversification, meaning you can invest in a wide range of companies or sectors with a single purchase. Additionally, many ETFs are designed to focus on growth, income, or both, depending on your specific financial goals. These funds can help generate regular income through dividends and interest payments. They also allow you to reinvest earnings automatically, which accelerates the compounding effect. This strategy is perfect for creating a stable and growing passive income stream with minimal effort. For those of you starting later in life, these funds offer an efficient and effective way to achieve your long-term financial goals without having to manage individual investments actively. It's never too late to start building your passive income, even after 50. The first step is understanding that the key to financial freedom is not about working harder, but making your money work for you. You don't need to take huge risks, but you do need to be intentional with your investments. Begin by diversifying your portfolio, investing in growth-oriented assets, and taking advantage of the power of compound interest. As I've said before, patience is critical, and so is understanding your financial goals. If you start now, you still have plenty of time to create a steady, reliable stream of income that will carry you through the coming years. The sooner you get started, the more time you give your investments to grow. Whether it's through dividend-paying stocks, real estate, mutual funds, or ETFs, the tools are available for anyone willing to take the first step. You don't need to be a financial expert to start building your passive income. You just need a plan and the discipline to stick with it. Remember, the goal is to build something sustainable, something that will continue to generate income long after you've made the initial investment. So take action today. Your future self will thank you.